Hey, Mike. So the record of soft landings engineered by the Fed is actually not great. So 1965, 1984, 1994. I think in all cases we had a great demography and we had a roaring economy, and the soft landing was really just about trying to prevent inflation. This is a very different situation. Inflation is here. It's worse than anyone on the board expected. It seems to be caused by things other than the economy, which is a little bit tougher for the Fed to address. Why do we think this this attempt at a soft landing will be successful where so many others failed and recession became the result?
Yeah, look, I mean, I'm not opposed to a recession potentially happening. Quite frankly, I would strongly suggest that we need a recession. Okay, we need to curtail demand. I've always said that we don't have a supply problem, we have a demand problem. The reason we have inflation is we overstimulated the economy and we created excess demand that led to, this surge in prices.
Well, we have both.
Well, okay, but we're producing way more stuff than we were pre-pandemic. Okay, it was a demand problem. We can debate that another time. The point is that if we got a recession, it would alleviate a lot of the inflationary problems. I don't think the Fed's going for a recession. Okay, let's put it that way. Will they be successful? I don't know. It doesn't matter to me, though, Josh, because at the end of the day, earnings are still going to slow and the price is wrong. So I don't even need to make a bet on a recession at this point to say that there's downside to the S&P 500 from 4,500. And that's sort of the point. I'm not trying to solve every puzzle out there. I'm trying to solve a puzzle that I can fix, and I know what that is that the price is wrong. So let's just get that right first, and then we can debate whether or not there's going to be a recession.
Pete, you got a question for Mike Wilson?
Yeah, Mike, thanks again for coming on. I know it's always difficult, but I will ask you this. So you talked about individual names.
You mean it's
I know
always
you
difficult?
Won't talk
Why is it always
about...
difficult? What are you talking about? It's always
well,
difficult.
He gets a hard time for he gets a hard time for people. But Mike, very seriously, the individual names, like you mentioned that earlier when you first started. I'm curious. I know you can't go over the individual names, but what sectors? Is there a specific area of the market, maybe 1, 2, 3 sectors that you'd say, you know what? Our economy's this, we're going to see a lot of pressure to the downside, but this is an area that I think you can actually is investable. Is there a specific sector you'd point out?
There's several, Pete, and thanks for your comments. I mean, look, healthcare looks extremely attractive in both a valuation perspective, and that's an area where there's pent up demand. It's also defensive, which is in line with our general defensive posture. Okay, and look, I mean, unfortunately, this war is terrible, and we all want it to be over. But there are some structural changes that are going to result from it, even if it ended tomorrow. There's going to be more spending on probably energy services. There's going to be more spending on, defense and national security, and that would be software security as well. So those are new trends that are just emerging here right now, and really just the inflationary trends that we're going to see in materials. Right, we're taking off a lot of supply permanently, regardless of the outcome of this conflict.